The Auditor General James Muwanga is cautioning the National Social Security Fund to resolve an 84 billion shilling note of a tax demand by the Uganda Revenue Authority.
Notice of assessment for corporation tax. The fund is challenging the basis on which the Uganda Revenue Authority disallowed certain expenses in calculating the company's tax assessment for the year ended 30th of June 2013. The note also indicates the directors have not recognized any provision for the liability of Uganda shillings 84.4 billion to the Uganda Revenue Authority.
But the National Social Security Fund management maintains that the contested demand by the tax body, which is already before a tax tribunal, is not necessary to be levied on members' interests.
What URA is claiming is that we should pay our members as a distribution of dividend, which would then mean that it would attract a tax of withholding, and that's the difference in opinion.
Auditor General Muwanga is expressing discomfort with what he calls constant reporting of the unresolved figure on the NSSF books, which institution he has since given unqualified opinion.
As management believes the tax treatment adopted by NSSF is in accordance with the provisions of Section 22 subsection 1A and Section 25 of the Income Tax Act. The note gives details of the case and explains that the directors have disclosed a contingent liability as the ultimate outcome of the case could not be determined.
However, NSSF's Managing Director, Richard Byarugaba, maintains that the heavily capitalized fund will triumph over the stalemate with the Uganda Revenue Authority.
In terms of a statutory requirement, when you challenge a case like this in the High Court, URA requires that you make a deposit of 30%. So we've already made that provision. We've paid the 30%. So effectively, if we were to pay the entire amount, 30% has already been paid. So we'd only be topping up at 70%.
The tax body could not immediately comment on this standoff, which is before a tax tribunal. Reina Ojon, NTV Business.